Good morning, I'm Carol Harmer from the International Trading Institute, and you probably know me as Charmer Charts or Charmer Trading, doesn't matter which one. But I'm going to be working closely with the International Trading Institute, sending out videos, running courses, being a mentor, all sorts of wonderful things that if you look on the ITI website, it will be up there, and there will be a timeline of what we are doing. It's quite exciting, really. I think this is the first of its kind, to be fair. I'm not sure this has been done before. Another brainchild from FX Street. Anyway, I digress. On Monday, we talked about the US markets, and I said to you, cover your longs. It's looking like it's running out of steam, and that is exactly what it did do. Let me show you what I mean on the S&P chart. Now, on here, you can see, where are we there? Monday. Right, there we go, Monday. Now, I looked at this and thought, I don't know, it looks like it's running out of steam to me. And all it had was a tiny little double top. You see, with these patterns, you can actually figure them out. If Monday it made a new high and closed at the open, it tells you that the market is running out of steam. We talked about diverging indicators, which we saw across the board. And, at the end of the day, what I think people don't realise is that traders want to make money. Seriously, that's all they want to do. And they need an excuse to make money, right? So any little thing that they see that comes across their radar, they're waiting for it. They're waiting to poise like a cat with a mouse. It's incredible. It is incredible to watch and to have been part of it for 40 years. It's never failed to astound me how accurate chart patterns are and how little you have to trade to make quite a bit of money. You don't have to be in and out and in and out, noise, just noise, don't do it, it's wrong. But something like this, where you can see the market is diverging, and what it does to traders that are really good is you get this feeling and you're like, I don't know, it's running out of steam, it's not making, it's made a new all-time high, closed at the low. First indicator, made a new high, closed at the low. So when you see something like that, take it as a sign, a signal, if you like, that all is not well. So we did extend over that 6423 high. We actually got to 64360. So it did overextend. We've talked about this before. Algos straight down, and there you are, Friday. So you can see where this little double top is, and it only needs to be a little double top, and I will tell you why. You make much more money trading from a short side than you do trading from the long side. So it's like up by the stairs, down by the escalator. Now we all know this. It's not something new. It's something that's been around all the time. Markets tend to go up and go up and go up, and when they turn, they just go splosh. That's what they do. So you have to be aware of the nuances of markets, nuances of hedge funds, nuances of professional traders. You have got to sit back and watch and see what the market's doing. Feel what the market's doing. See what the market's doing. And you can do that quite easily by just eyeballing a chart. You know, that's what I, oh, shush. That's what I like to do. That's, you know, for me, that's part of being a trader. So, you've had no real correction since April of any significance. You know, it's gradually gone up, sideways, gone up, you know. So I'm going to take some fib levels and see where we can come back to. Now, I'm not saying for a second that the bull market in S&P or in the US markets has gone into a bear market. I'm not saying that. What I'm saying is, it's like, for the short term, for your 3 trades a week, you know, 4 trades a week, you can make money just not going past a 4-hourly chart. That's all you need. It really is. It really is that simple. Look at it. When you eyeball a market, you look at what it's doing. It speaks to you, or it should speak to you. You should be able to look at a chart and it tells you a story, and they do. So don't be under no illusion that they don't, and don't listen to people that say, yeah, but mechanical, you know, algorithms work much better than a trader. They don't. They really don't. All right, they will do for the guy that doesn't want to be bothered with trading and just wants to, you know, make, I don't know, money every single day on in and out, in and out, in and out, in and out. But you know, life's too short. Seriously, life is too short. You can pick your trades. Now this week, you know, we're now in August. So this week, you want to be looking at doing your weekly pivot, but your monthly pivot, as well as today's pivot, right? For Monday. So what I used to do, I know I was pretty a workaholic, but what I used to do, I used to get Sunday, and I'd go through all the markets that I traded, all of them, and I would look at what was interesting, what did that, where, and whatever, and that sets you up for Monday. Okay, so on Sunday, you should have on your piece of paper, write it down. That's what I do. I just use pen and paper. That's it. I've got a little book. I mean, it's a big book, but I write it all down because that's how I was. That's how I taught myself. I was going to say trained. I wasn't trained. I learnt on the run. You know, it was trial and error with me because no one knew nothing about charts. Anyway, again, I digress. So, if you get yourself into, like, what do you want to trade, and you look at that market and you know you've got to do your weekly pivot, now you've got to do your monthly pivot, then you've got to do your daily pivot, tie them in with Fibonacci retracement levels, tie them in with moving averages, tie them in with eyeballing a chart, looking at it, feeling it, it moves. If you don't have that gut feeling and you're unsure of pressing that button, you need to come on the beginner's course with us at ITI. You really do, because seriously, I was never a short-term trader. That's the only way I can look at it. You know, spot desk, you trade 250 million quid every 10 seconds. Me, no, not so much. You know, I'd pick my trades. I'd run my trades. You know, there was some I got caught on when Reagan got shot over the weekend, or, you know, did have the G5 meeting on a Sunday. Oh, that would screw you up. But I was quite happy running a position over the weekend. I'm not for 1 minute saying that you should do that. And in fact, I would suggest now, these days, don't do it. But you don't need to, see, because it will tell you. This will tell you the story. So, for confirmation, we love a confirmation. So, there we have it. We've got the S&P. Where can it retrace to? Well, you've got the 6235, which is 38.2. It's just touching our little trend line that the system puts in. You've got that. You've got 6235 and 50%, 6173. If you look at our 50-day moving average, that is coming in at 6357. Okay, so you do have this sort of glut between the 50 and the 61.8. But even though that's a little double top, traders will provoke it to trade lower. So now let's look confirmation. We'll look at the other US markets. Now I like the Nasdaq. For me, it's a really good market. So I look at this Nasdaq quite often, and if I show you now what it's done, Nasdaq has had a key day reversal, and I did that yesterday. Now what that is a higher high, a lower low, and a close below the previous day's low. All right. Now you may hear terminology that is different to what I know. Okay, but at the end of the day, it means, I mean, cup and saucers, handles and whatever, and swinging dojis, they don't cut it with me. The way that I chart a market is with, hey, that's the key day reversal. That means the market's going down. To where? So we have a look. We put on fib retracements. We have a look, and we take that point. Come on, you little tinker. There you go. Oh, come on. Now, already we're through the 9 and 18 day moving average, and we are approaching the 38.2 at 22848. Now, you can see where the indicators were flatlining on the move up. Not good. You can see where the RSI was like just flatlining on the way up. Not very good. This key day reversal is quite important for where direction it will go. It's the technology stock. It's the Nasdaq, and I find, or I have found, that trading the Nasdaq and looking at the Nasdaq, you can usually get confirmation, or it leads the rest of the markets. That's what I've always found. And you know, if you're trading the S&P, you do need to look at the other US stock markets, not the UK ones or the European ones so much, because they really don't have many. They don't have many stocks. I mean, the DAX has only got 30 stocks in it. SMI the same. Paris has got, or France has got the CAC. I need to say no more on that one. So if you're trading the US, stick with the US. The US markets don't do much in London time. They don't. I know we have American traders over here, but usually, you know, they wait for Wall Street. They always wait for Wall Street. All right. Fridays is an odd day to trade. I would suggest, the way this is going, that you could run positions over the weekend, or if you want to, take your profits, sleep tight over the weekend, go barbecue, go sunbathe, whatever. But Sunday night, Sunday afternoon, all right, the more work you put in to doing this, the better the rewards. Please believe me, it isn't a case of just pulling levels out the air. It isn't, you know, otherwise everybody would be like me. They're not. So you need to put the dedication in, you need to do the work, the groundwork. The more work you do, the more you will get out of it. Alright? So we called the market right on Monday, Friday we're down, we look again next weekend. Have a great weekend, alright? And I will catch you all Monday. Yes, Monday. Okay.